Hello, welcome back. Chinese tech giant Baidu has reported a surprise jump in revenue despite intense competition in artificial intelligence and an ongoing economic slowdown. First quarter revenue rose 3% to $4.5 billion. Net income for the first 3 months of the year came in at just over $1 billion, which was up 42% from the same period last year. And as part of that AI competition, Baidu has axed subscriptions for its chatbot Ernie, making it free for individual users. Rob Nys is founding partner of H-Tree Capital, a London-based technology venture capital firm.
Everyone's riding this wave of AI right now and the frenzy to apply it to different areas of opportunity. Baidu, again, is fairly unique, like Google or Alphabet, in a way that they also have self-driving cars, so they can also apply AI across their various business units.
So is that going to be where the company's growth is, do you think, the AI division?
I think more likely than not. I mean, obviously, they have lots of different bets on, like Alphabet does, but I think, in the clear and present sense, the most obvious opportunity is going to be all around AI and spinning that as many different ways as they can.
When it comes to their ChatGPT equivalent, we'll call it Ernie, they've made that free to individual users. That sounds like a counterintuitive move.
I think it's a way to get awareness and usage up, and frankly, to get them better data that they can start tuning themselves. I mean, when you're building an AI model, there's training data and then there's real user data. And frankly, for someone starting from behind like they are with Ernie, nothing really benefits you better than having real actual user interface. So I think it's a smart move for them to build mindshare and to show that, frankly, they can still come up and build a winning product.
It's obviously a very competitive space, AI, particularly in China. How competitive is Baidu in that arena, do you think?
I think that they're a player. I mean, they're one of several that are all leapfrogging each other. Nearly week by week, one will do another launch that upends the other. So I think it's still an open stakes race that it's unclear who will be an ultimate winner or whether there'll be several around the same level of quality. But I think Baidu has just as good a shot as anyone does, similar to how the U.S. players are shaking out now.
And you mentioned Baidu's autonomous ride-hailing service, Apollo Go. Where does Baidu stand in that market?
Yeah, they're coming from behind. They're looking at entering Europe now. I think it's interesting, and its ambition that unlike other pure AI products, it's not just siloed into China, and they're thinking about taking over the world in a similar way. It's interesting. It's much more of a long-term bet than pure AI stuff is right now. But I think it shows the company is thinking quite strategically about how do they expand worldwide and how do they find interesting areas that require a lot of capital and you build an eventual moat to keep others out.
Do you think that is going to be a big market, the autonomous driving industry? Where do you see that going this year?
Yeah, I think it's still early days. That we've said we're ready for autonomous driving, every year for the past 5 or 6 years, or it's a year or two away at best. And now, frankly, we have maybe 2 cities in California that have somewhat viable access to this. And even in LA, you can't take an autonomous car, self-driving taxi on the highway, for example. I think it's still a ways off, but these are long-term bets you have to make as a company that, if and when it does reach a point of hitting critical mass and acceptance, there's going to be a lot of cities where this is going to be a desirable product. So in my mind, it's a bet these companies need to make and make strategic sense.
So going back to the bigger picture, good figures for Baidu this time round. What might be the hurdles they need to look out for going forward?
I think for all these companies, with AI, the costs are quite staggering up front to build the models, train the models, support the usage. So when you have unlimited free tiers, that of course lends itself to very wide use. The real question is, can they up the stakes and increase fees as they go to match the actual usage? You're seeing this now in the U.S. with some of the providers building OpenAI, for example, building a programmer level tier that's $250 a month, for example. I think all these companies are going to make that evolution where it's free or cheap in the early days. Then in time they start to monetize and find the right price point that both companies or individuals are willing to accept, and that's still not really shaken out.